Good morning, everybody. It's the 9th of May. We are Signal Centre Talking Ball. I am Joe, joined by Steve and Jamie. Good morning, gentlemen.
Good morning.
Good morning.
How are
What
we
a
all
lovely
doing?
morning it is. Lovely. Yeah,
Yeah,
nice.
shaping up to be a good week this week of weather for us in the south.
Is it all week, is it?
I
That's
think
nice to
so.
know. Yeah,
Yeah,
I
lovely.
love that.
indeed. Okay, I hope you both had a good weekend.
Yeah, very nice, thanks.
Yeah, it was good.
Cool.
It was good. Thank you.
Good. Right, let's get stuck in then, shall we? Let's get to the headlines first of all, and they're up on the screen now. So first of all, we had the jobs data that came out on Friday. The non-farm payrolls increased to 428,000 for April, which was the same increase as reported for the revised March data, and slightly above the consensus forecast of 395,000. So that keeps the narrative in place. In terms of what happened as a result of that, we saw US bond yields continue to surge after a limited decline following Chair Powell's comments on Wednesday. We saw US yields move sharply higher on Thursday, near 3.15% now, which is the highest level since December 2018. Equities continue to remain vulnerable, and the dollar has made further gains. US equities attempted to rally at times on Friday, but eventually came under renewed selling pressure amid fears over higher yields and tightening financial conditions. The S&P declined sharply to 12-month lows, and on the back of that, we saw the US dollar move to fresh 20-year highs. In terms of what's going on in the UK, the Bank of England chief economist Pill confirmed that two members did not sign up to the Bank of England's guidance as they considered that enough may have already been done. He added that the bank should not over-respond to short-term developments and be overly aggressive with policy moves. We continue to see lots of market participants shunning sterling. The latest CFTC data recorded a further net increase in short sterling positions to near 74,000 contracts, the largest short position since October 2019, as global speculators maintained a negative stance. And finally, we saw the Canadian jobs gain failed to meet the expectations on Friday. This came out at the same time as the non-farm payrolls, and obviously generally gets overshadowed. But we saw an increase in employment of just over 15,000, but the expectation was closer to 40,000. So that was a little bit underwhelming. So let's get now to some charts, and we can set up the week with these charts as well and have a look at our technical outlook. Steve, do you want to kick us off today?
Yeah, sure. I'll start with Bitcoin and looking at the weekly chart, really, which is the really interesting one taking shape at the moment. We've got this head and shoulders type formation, which I've highlighted weeks ago, and this channel formation, which has broken down now after last week's price action. You can see close the week on an extreme low, very close to we're approaching what we would class as long-term support. The low of the candle of the week of the 24th of Jan. So this is this year's low. I know we're only sort of in May, but it's 5 months worth of low. Comes in at 32,950. So we'll call it 33,000 to make it easy. And the low today is 33,673. Below that, we have a band of support between that level, or just above that, just below that level. So 32,000 to 28,800. This is the serious support level, which has to hold this 28,800. A break of that, and we should see a bit of an exponential sell-off. I think targeting the move to 20,000. So Bitcoin for me is really sort of approaching some critical levels. We'll call them critical levels. Ethereum, actually, I'll just take a look at the level to watch in there. The low from that same week that we were talking about is 2,160, currently trading 300 points above there. So you're looking at a 15% move lower before we test that. And the main level of support is 1730. That's the line in the sand as I see it. Jumping from there, quickly cover commodities before I hand over. Looking at gold, last week's chart in gold was almost a bit of a non-event, really. At one point, we saw a really decent rally. We got up to 1910 before sellers came back in. So we got a nice band of resistance between 1910 and 1920. The support or last week's low was 1861.5, and we're not far away from retesting that already this week. 1870 trading. We've got this upward trending support, which is very important here. We can actually draw it in if we want to bring in these two lows here. It sort of takes out this low here, but that's a nice trend line, and that would be for me the level to challenge and break, and that's 1850. So a break of 1850 in gold, and it's sayonara, baby. We should see a move, an extended move lower towards about the 1785 level. Finally, I just cover off oil, which is remains on the front foot, although momentum, if you look at this MACD down below here, is crossing over. So maybe we'll get, it feels like this could be a week of a really aggressive indice, crypto, commodity sell-off, all going together. Maybe the only thing that will be supported or look good was the dollar. I don't know. Joe will let us know about that. But yeah, so resistance on the top side in WTI crude oil, 110.30. Really, a break below 92.46, which is way away, is negative. So I expect oil may be also one of the ones that hold up, unless the dollar does take a big lift to the upside.
Okay, cool. Thanks, Steve. Okay, let's move on to FX then. So yes, dollar index remains super buoyant. It's continuing to trade around 20-year highs, making fresh highs today. My chart doesn't actually go back far enough to see when it was last at these levels. I'm sure I could find another source of information for that, but I don't know, maybe it will do, actually. Yeah, so we're back here 20 years ago since the dollar was last up at these levels, and looking pretty strong overall. We are approaching a 261.8% Fibonacci extension level at 104.52, so that may provide some resistance in the very short term, but overall it looks very strong and showing no signs of slowing. So on the flip side of that, we're going to see euro US dollar that continues to trade on the back foot. We rallied into resistance here at 106.37, which stalled and sent prices lower. So we've got some support in at this swing low that we post on the 28th of April at 104.65. If that gets taken out, then we're looking for a move to 103.40. And the last time we were at that level was back in 2017. So looking pretty scary for euro US dollar. As you can see here, big trend to the downside and no signs of that slowing. Similar situation with cable, that's down 0.48% today, making fresh lows. We've got a 78.6% fib level down at 120.24, which is the next level to target on the downside. And that's from the entire move that's played out throughout the pandemic, really, from the lows that we posted in March 2020 to the recovery that we posted at the highs in May 2021. So looks pretty weak and under pressure. No signs of that changing anytime soon. If we take a look at some of the indices now, going to start off with the German market. That made fresh lows this morning below the swing low that we posted on the 26th of April, stalling just in front of a 61.8% fib level. A little bit of a turnaround, up 0.5% as things stand at the minute, and looks to be the market that's outperforming in Europe today. Overall, the trend still remains bearish, so not getting overly excited about that just at this stage. So potentially looking for opportunities to sell into rallies on that for now, but an interesting turnaround there, making a small new low, but then reversing quite quickly. FTSE 100, it's a similar situation. We made lows down to around 73.27 this morning. Overall, still quite range bound and being propped up by obviously the strong oil and commodity prices at the moment. On the US side of things, we saw the Nasdaq break down to make new lows, taking out this 38.2% Fibonacci retracement level, taking out these previous swing lows that were posted, and it looks pretty sick, to be honest. I think we've got a really large top pattern in place here. We've got some support to target from these previous lows back in March 2021. That comes in at 12.213. Below that, we've got a 50% Fibonacci retracement at 11,702. So looks to me like it's going to remain under pressure in the short term. So do be careful if you are buying anything associated with NASDAQ. Taking a look at the S&P 500, I've got a head and shoulders top pattern drawn on here. We're taking out this low from the 24th of February, and we're trading below it as things stand. We haven't seen a close below it yet on the daily chart. That could be all important. But again, it looks under pressure and showing no signs of slowing down. I think we've got a really large top pattern in place here too, and we are set to see a fairly chunky correction. If we go for a fib setup from these lows from the pandemic to the highs, then we've got a 38.2% fib level here at 38.11, and that would just be a pretty normal correction in the grand scheme of things. I know it doesn't feel like it because it's come quite considerably off of the highs, but I think a retracement down to this sort of region would be a pretty healthy thing for the long-term health of the US stock market, but we'll have to wait and see. Okay, Jamie, what you got on stocks?
Thank you, Joe. Yeah, it's a similar kind of picture to what we were looking at from Thursday's session. Honestly, Friday's session wasn't much better, but we'll start off with our biggest gainer and loser. And our biggest gainer last week was the Arena Group Holdings, which had this really clean break through this previous resistance level that was putting up at about $11. And a significantly, I mean, you can see that there, a good strong close through that at 15, up 43.54% on the day. Our biggest loser is JYNT, and this was off the back of earnings, and it's the same thing that we keep coming to when we look at earnings. The price action into earnings was really bad, and then we had this big gap down to finish 37.89% lower. Looking at some other stocks now, and if we change this to the highest percentage losers, you can see all we see is red. Very few of the stocks that I've been watching finished in the green last week. But we'll firstly take a look at some of the weekly charts. I think they're quite important to take a look at. We're just going to flick through a couple here and see if we can see anything that looks good. And this Coinbase, it's had, 6-7 weeks now in a row closing lows. I think that's 6. This is Plug Power. Plug Power is at quite a key level, actually. You can see we've had this support level about 1850. As I like to say, we've wicked off it here. We've also had a bounce off here. This is a bit of a descending triangle type pattern we've got here on a longer term. But at this key level again, so we'll see if it can hold. But if not, I think we could see a substantial move lower there. Roblox horrible, Shopify horrible, Snapchat horrible. I'm not going to keep saying horrible, but there's not a lot to like on a weekly chart here. It's hard to pick anything good out. I mean, AMC were at this support level we drew up before we had this big impulsive move up. We're back at this level. We've got earnings on AMC. It looks like today, after close, maybe we can have a quick look at the corporate calendar afterwards to see about that. And again, look, I said it earlier, the price action is not looking great going into it. Certainly be careful if you're thinking about trading AMC today, because, I mean, a lot can happen off earnings. Palantir, we finally moved through this support level we had. This comes back to something I referenced quite a lot, whereby we hit the support level. We didn't have the reaction we wanted. The bulls didn't come back into the market, and now we broke through. And if we look at that on a weekly basis, we can see it's a considerable close through that support, almost down to the IPO levels in 2020. And it looks like, again, we have earnings for that today before market open. So that'll be one to keep an eye on for sure. Moderna is still kind of chopping and changing in the middle of nowhere. We're keeping an eye on this potential head and shoulders pattern. See it on the weekly a bit better. It looks like a head and shoulders top, but we'll have to see how that develops. Again, not healthy looking price action at all. I tell you what, we might be able to fly through all the ones we watch if we keep this up. Airbnb coming back to the support level. We looked at that last week. 130 is an interesting level for sure. It looks like the earnings are actually quite good, or at least a slight beat on what the analysts estimated, but the market didn't like it and it sold off more. Etsy, quick look at Etsy. We're back to this 78.6 fib we looked at. We've closed through it. Next level we're looking at here is about $70. That was quite a nice trade. I think we managed to get into there. Alibaba. I mean, this is an awful story for Alibaba. And it only looks to be getting worse. There's not really much sign of a recovery. We did have a slightly higher low here, which you could argue is good, but it looks like the sellers have come back in quite quickly. And again, earnings today. It looks like there's a lot of big earnings today. We might have to pull that up in a sec. So I'll try and wrap this up. There was one more I wanted to take a quick look at. Here we go. We looked at Avacta Group before, and we looked at this key level here of 100, and it looks like we're back there right now. Well, it doesn't just look like it. We are back there now. So this 38.2, it's not like a hugely important level. I mean, you could see a deeper retracement off this move. Put up a couple more fibs. There's other targets we could have, but I think the significance of how this support is held previously, so you can see it's been quite a key zone, might be a good risk reward trade. I'm not sure. It depends what you're kind of into. But I mean, to summarize, not a lot to love again. There's been some huge moves down in a lot of these stocks, particularly tech ones. We'll quickly finish with Netflix. And I always say that when something bad happens with a stock, it can always get worse. And you might have thought, look, these earnings are terrible. I think we looked at it last week. We're down whatever it was, 35% on earnings. We're now down close to 50% off that. So I guess the last thing I'll say is just because the stock is down a lot doesn't mean necessarily it's the right time to get back in. You've got to look for that turnaround story, for something that gives it a more bullish picture. And for something like Netflix at the moment, go out to a weekly, we do not have that at all right now. So be very careful. These are really difficult trading conditions. So make sure you're using appropriate risk management, because otherwise you'll be wiped out, and that's no fun for anyone. But we'll call it a day on the stocks there.
Cool. Thanks, Jamie. As you touched upon there are a number of earnings due out this week. So we've got the earnings calendar up here, and there's just so many to go through. So I think we probably just do it on a day-by-day basis rather than trying to go through the whole week. But yeah, some interesting bits there. Maybe we'll follow up on how they look and how they perform versus our sort of metrics later on in the week. So let's have a look at the gun to the head challenge then. So every time we do one of these videos, we basically make a live prediction on the video of where we believe we could find some value in markets today. So each of us picks these live trades on the video. Each of us places a stop and a target on the market, on the markets that we're trading as well. They will expire at 9 p.m. tonight, or when the stop or the target is hit, and we add them to our TradingView profile so people can monitor how they've performed. If we take a look at how we did last week, on Friday, we had trades on sterling, New Zealand dollar, gold, and euro stocks 50. And we had 3 wins out of that. They weren't big by any means, but on a non-farm Friday, to come away with 3 wins, I think that's not too bad. Just under 1.
No, I didn't win. Sorry to pop your balloon, Joe. Mine was actually a sell trade idea.
Oh no!
Oh no!
Stopped out then.
Yeah, it was. Otherwise, the risk reward would look pretty horrendous. It did work. If it was a buy trade idea, it did work. It was
so
like,
if we'd done the opposite, would it worked?
Yeah, exactly that.
Well, listen, Steve, you're a very honest man, and I think that's what people get when they watch us. We are honest. We could have blagged that, but we didn't.
No, I'm glad you pointed it out. Actually, it was pointed out by a guy on TradingView who said, "Oh, you got your trade wrong," and I thought he was just saying, "Oh, you're doing the wrong trade," but I actually had written it in as buying instead of selling. So apologies for that, and thank you for pointing it out.
Yes, indeed.
It's nice to sort of like know that people are actually listening or watching and realizing.
Yeah. Okay, cool. Well, that's been changed then. So apologies for getting that wrong, but yeah, we're honest. Put our hands up. We made a mistake. That's how it goes sometimes. So, Steve, you need to put it right now. So you need to give them all a winner if you can.
Oh, that's really putting the pressure on. I'm not going to give them cryptos because I'll be saying something quite negative in cryptos. Let's have a look at. Well, if anyone's ready, they can go. Because
Jamie, you got one ready?
Yes, I have. I can go. So today I'm taking a look at New Zealand dollar versus Japanese yen. This is the kind of thing I like. It's kind of running away from me a bit, but that's how it goes when you talk too much. We've got a previous support level here, about 83.40. It's broken through. We had a retest, and it looks like the move down is continuing. I'd probably prefer to get back in closer to this level to get a better risk reward. But we're just going to go for a small one today. So we're going to look to enter this at, let's see what we're trading at, 83.23 is going to be our entry. We're going to keep our take profit 82.40, and our stop loss we're going to keep at 83.64. So this is a very modest 2.202 risk reward. So looking for a move lower on New Zealand dollar, Japanese yen today.
Luck, mate. Steve, what you got?
No, nothing,
Still
mate.
nothing. Right.
No.
We're going to be blagging this between us now then, because I haven't got anything either.
Everything's at sort of like the sort of break levels, the really critical support levels or whatever. So we're either going to get a little bit of a bounce, or we're going to sort of see this capitulate. I'll tell you what I might go for. I might go for oil. And I said on a weekly basis, this looks pretty positive. We're at the the inverse head and shoulders played out, and it's hit the measured move target, so that's a good thing. We do have potential for a double top formation, but really only would confirm that on a break of 105.40. But we've seen a negative move in the last 3-4 hours, so I'm going to go for selling oil right here. I'll have the stop just above the previous 4-hour channel at like 109.30. And I'll look to target maybe a move, something like that, down to 102.30 around this level of support here. Yeah, potential double top formation, I'd call that. Yeah, getting short here in oil at 107.30, stop at 109.30, targeting 102.30.
2:30?
Yeah, I've got a dentist appointment at 2:30 actually.
Okay. Okay, good luck. I'm going to take a look at DAX. So this started off pretty strongly. So when I was just speaking about it, it was up 0.5%, but we've seen it reverse and it's now down by 0.1%. So this is the hourly candle chart. We've got a swing low here from the 26th of April, which seems to have done a job as support. But we saw a decent rally over the last hour, which is now reversing. So I'm going to sell it now and believe that we're going lower with this. It's currently at 13,620. I'm going to put a stop above the highs that we posted today already at 13,708. And I'm going to target a move down to 12,965, which is the 78.6% Fibonacci retracement of this move here from the lows in March to these highs here also in March. So that's my trade of the day.
Nice one. Good luck with that.
Okay, data wise today, not an awful lot out on the calendar. At 2 o'clock today, we've got a Bank of England Monetary Policy Committee member, Saunders, speaking. That's the only high impact event today. And throughout the week, the only thing that we've got listed on our calendar of high impact events is the US Consumer Prices Index number, which is due out on the 11th. So it could be quite a quiet week on the macroeconomic front.
Nice.
Okay, gents, anything further to add before we wrap this up?
No, all good.
Nah, you're good for me.
Lovely. Okay, well, have a great day, everybody, and we'll be back tomorrow.
Lovely. Cheers. See you then.
Bye-bye.